whenever the rules massively change, there's always money to be made. So these new fundamentals that the United States are imposing on the rest of the world is going to bring through it huge change in the rules. And with that, opportunities for you as an investor to take advantage of if you've got the stomach for the volatility. Now, the first thing is these tariffs are going to bring about inflationary pressures within the US domestically, and that is going to put pressure on interest rates. Second, the decoupling of the United States economy from the European and Asian economies with these tariffs is going to drive people away from the United States dollar as a reserve currency. Now, the Trump cabinet seem to think that they're going to be able to act the way that they want to without losing the privilege of the United States dollar being the reserve currency. They're wrong. You need your trading partners to own and hold your currency, to accept your currency, to trade with it if you want to be the world reserve currency. So what they're doing essentially is going to weaken the United States dollar as a global currency, and we'll see more and more people, economies flock to gold. China have already abandoned US bonds as a type of foreign exchange reserve, and they're now investing heavily in gold, as are the IMF, and other global powers around the world will be doing the same. So what they're doing is sabotaging the United States dollar as the world currency. And that's undoubtedly going to be favorable for the likes of gold, because if you don't hold United States dollars or bonds as a foreign exchange reserve, you will have to hold something else. And currently it doesn't seem to be a good option, so it will be gold. Now, the second place I'm going to be adding money to my positions is in my bank shares. I've been an investor in BBVA for just over a year. And the reason I started investing in banks more widely was that I believed that the market's expectations that interest rates were going to drop back to 2 or 1% and the inflation was over. I believe that was complete rubbish. Once inflation's in the system, it's very difficult to get it out. And so I believe there was going to be a consolidation in interest rates, and that's great for banks. Obviously, banks, when they can charge an effective interest rate, that's where they make the majority of their income. You know, having an overnight rate with the central banks is where they generate a lot of revenue as well. So interest rates are good for banks. And so if we've got inflationary pressures, we should also see interest rates at least consolidate, potentially rise, and that's more revenue potential for the banking sector. And the final place where I'll look to increase my investments is in my high dividend value stocks. I've been an investor in BAT for the last couple of years. I'm now transitioning that over into Imperial Brands. I think there's more growth there. I think their vape products are more popular with consumers. So high dividend value stocks, I think, will do well. They're a safe haven for investors in times of volatility. And given this recent fallout and the fallout that's going to come over the next months and potentially years, investors are going to look for a safe place to keep their money. And so we're not going to be buying dreams, and we're buying dividends.